Hello and welcome. How does the global community of investors look at the India story at the moment? Is India the world's cleanest dirty shirt? The one bright spot in a world beset by geopolitical and economic uncertainty, virtually in a state of perma-crisis? Does India have the makings of a separate asset class outside the stack of emerging economies? Could India potentially lead the next global bull run, and what would it take to do so? To talk about this and more, I am delighted to be joined at the India Today Conclave in Mumbai by Professor Vikram Gandhi. Professor Gandhi is a senior lecturer at the Harvard Business School. Before he became an academic, Gandhi was the vice chairperson of investment banking at Credit Suisse and the country head of Morgan Stanley in India. At HBS, I had the privilege of sitting in on some of Professor Gandhi's classes. He is an absolute rock star professor, much loved by his students for his teaching style as much for his sharp insights, and I'm really looking forward to this conversation. Join me as we welcome to the India Today Conclave, Professor Vikram Gandhi.
Thank you very much.
Professor Gandhi, you sit on many global boards, pension funds. Can you start by giving us a sense of how you, sitting where you are, view the India growth story at this moment? What do you like? What do you not like?
So I think sitting where I am, and just by the way, before I start, having Rahul was one of our star students at HBS, always learning. So I'm glad that I'm here with you on this podium. You know, as you probably know, the world is actually going through some serious course correction, serious kind of correction both in the equity markets, fixed income markets, capital flows. And I think in that context, I would say to your analogy that, you know, a cleanest dirty shirt, if you will. I think right now, I would like to break my comments into more short-term and longer-term. I think short-term, the flows into India are going to be limited. People are retracting from the equity markets. There have been flows outside of India over the last year till August and September. They may be correcting now, but again, given what the Fed said yesterday in the US, that you're still going to have consistent level of outflows for the foreseeable future. But I think as far as growth goes, as far as, you know, there was a couple of reports, Morgan Stanley just put out a report a few days ago, which I saw, which said India, you know, basically the next decade is India's decade. And I think I basically kind of subscribe to that significantly. And cutting through the noise, I think the reason why investors are looking at India in that context is just two or three things, just to keep it very basic. One is, it is potentially, I mean, the demographic dividend we've talked about, or has been talked about, but you're getting closer to actually harvesting the demographic dividend. India needs to create 10 million jobs a year. That is more than the next 10 countries combined. And, you know, we're getting there, in the sense you're halfway there, but lots more to be done. So I think that's one broad thing. If you look at all the countries in the world which have, you know, the Asian tiger, some of the South American countries, etc., once they reach $2,000 of GDP per person, there is a massive kind of uptick that happens. And India is right now at that level. So I think if you just take those few factors and then look at some of the factors in the last few months, you know, the revenues of the government going up, GST, income tax, a lot of cash flows going up. I just read an article yesterday about the fact that credit creation in India, you know, loans, etc., going up. Banks are actually out on the street with megahorns to collect deposits. So there's actually a huge potential momentum, maybe not in the next 6-12 months, but going forward. But I want to also highlight concerns, right? The biggest issue, that's okay. So when you look at, and I'm not talking about individual stocks, but think about it in your own personal capacity. When you look at, you know, your own P&L, your daily spending, in the Indian context, India has a current account deficit of about 120 billion. What does that actually mean? What that means is that you're spending more in the international context than you are earning. And the way typically people would fill that, like if you were in your daily life spending more than you were earning, you'd fill it by borrowing, you'd fill it by selling assets, you'll fill it in those mannerisms. And that's really, in a way, what's happening with India. So they need to kind of fix that. I'll get into that a little bit. So that's kind of one. And two, the big issue, I think, is the governance issue. You talk about strategy, you know, what should India Today's strategy be, group strategy, digitization, blah, blah, blah. So you can come up with a good strategy, but how you execute and make things happen on the ground is actually one of the most critical things. And so like in the Indian context, when we as a foreign investor look, there are some actually great policies that have been put in place at the central level. But of the 51, basically, government departments, if you will, or ministries, 27 of them, the actual implementation, like urban development, heavy manufacturing, etc., actually happens at the state level. And we've obviously heard from the different aspects of Maharashtra state. 27 of 50, more than half, right? There's four or five which are joint, like roads and power. So while the center may make a lot of interesting policies, actually making things happen on the ground is really critical. And unfortunately, we find that execution is still a problem. I'll give you an example, and then I'll stop, which is, you know, like a toy manufacturer. So like small, medium-sized industry. Toy is not like a high-tech thing. It's taking advantage of the problems going on in China, where last week I was in China, in terms of building supply chains here. So it's not something which is very high-tech. But for this toy manufacturer, to get an approval to build a small, medium-sized kind of thing was 22 approvals needed, right? So what do you think happens when 22 approvals are needed, Rahul? What do you think? I'm also supposed to ask you a question.
Either they get frustrated, or if they're in Maharashtra, they go to Gujarat instead.
Correct. Exactly right. There you go. Good choice. So that's it. They get frustrated. It takes a lot of time. And the other thing, which I guess you won't say, but I'll say, is that having 22 approvals is a classic formula for corruption. It is ultimate formula for corruption. And so partly company like going from one state to the other. In fact, this guy told me that, hey, I went from this state to that state because the KPI of corruption is much better there. Means you pay them, they get stuff done much faster than this state. So if you have anecdotes like that from a foreign investment perspective, and you need to kind of make India where it needs to get to, we really need to root that out. I mean, I know it's been said before, but it's something which, this is India's decade. It really is. And I think that we just don't think big enough to actually make things happen.
But for India's critics, there's a sense of deja vu in what you're saying and what Morgan Stanley is saying, that this could be India's decade, because this has been said in the past, that India is on the verge of taking off, and somehow that airstrip is so long that takeoff never really comes about. And in the last couple of years, they've been unfortunate because the pandemic happened, Russia-Ukraine happened, interest rates started going up, inflation started going up. What makes you think that this time could be different, that this won't be yet another missed opportunity?
Yeah. So I think we shouldn't underestimate the fact that there has been a lot of growth here in the last 4 or 5 years, regardless of anything else. And I want to get back to that whole issue of the $2,200 per GDP per person, which is that actually creates buying power at scale, which hasn't happened before. And I think the other thing, which, you know, as I said, I was in Hong Kong last week, there is a massive, you know, when I talk to corporations, and we have a lot of CEOs come in my class and all that in Boston, there is some serious concern, as you can imagine, that supply chain concentration in China, and given all that's going on, is a big problem. I mean, while we talk about the US and all that, Germany is so dependent on China. In fact, the Chancellor of Germany is now going to visit China right now. Is that there is a huge opportunity which did not exist before for manufacturing here in India. And I think that's a new kind of thing as well. I do think also that, you know, you've had some consistency of policy at the center. I mean, obviously we talked about what's happening here in the state, which is a different issue. But there's been more consistency of policy, which is, again, you know, investors look for consistency. So I think I'm quite optimistic. I mean, some of my clients have invested billions of dollars here in the last 3-4 years. And I think that opportunity will only go up. I will still say, though, you know, when there's this self-touting thing, I mean, people like sitting in India, and I grew up in Mumbai, this is my town, even though I'm not Marathi. You know, there's this like self-praise, oh, we are so great, we do this, we do that. You have a few success stories here and there, or India is much better than China. India is far behind China. And I put where, you know, India is today is 15, 20 years behind China. I mean, it's a $14 trillion economy, going to overtake the US, who knows when, but at some point it will. And India is like just about to take off. And I know you said that before, you've heard that before. But given the per capita GDP issues, given how people are getting more comfortable, but getting over this execution issue, and the fact that when we're talking about a new investment, oh, we're doing $1 billion investment. People don't talk about $1 billion investments in China. They talk about 10 billion, 20 billion, half a trillion. That's how we got to think big. We just don't think big enough because we get very, very happy with our, while we setting up our airbag factory, which is great, don't get me wrong, but it can be multiple fold.
Let's spend a moment talking about India as a manufacturing base. Now, there's a big global debate in India and elsewhere about the potential that India holds as a manufacturing station. On the one side, you've got the idea that because people are looking to diversify their supply chains in a China plus one world, India is the natural benefactor. India will benefit as a result of that. The government thinks because of its production link incentives, it's now attracting investment. The flip side to this is that there is simply so much value accretion happening in manufacturing in China that a lot of this will remain talk, it won't translate into action. Which one do you think is more likely to play out in the years to come?
I think again, China obviously has its issue, but I think that because of what's going on in Ukraine, because of the supply chain issues, because of now with what's happened in China with the Communist Party being, President Xi being re-elected, not re-elected, whatever, reappointed for the next 5-10 years, is basically people are very concerned that you can't have all your eggs in one basket. So that's a big shift, actually. And while it was there the last few years, it's just totally accelerated right now after the last few weeks. So I think you're going to see a lot of demand in the product company. But I would say right now there's more people are looking at Vietnam and Thailand to make those investments than they are to India, which is a tragic situation, I think. So I do think that, and why? Again, the execution issue. I want to set up some factory somewhere, there'll be like 22 things, corruption, this, that, and the other. So it's making it a little more easier, and there are good examples of that, by the way. So in terms of manufacturing, as I said, a lot of execution happens at the state level. I would say that what's happened with cell phone manufacturing, which was, the Chinese have 70-80% market share here, is that over a period of time, in a reasonably short period of time, in, say, Noida, in Chennai, because of execution, because of these production-linked incentives, which the government has put in place, which I think is a great policy to get things going, they've actually been really successful. And now India is the second largest manufacturer of smartphones in the world. And so there are good examples of this, but I just think it needs to happen at a much, much grander scale than it has in the past.
What more would you like to see? You've spoken of some of the problems and challenges. Yeah. If you were advising Prime Minister Modi and his government at this moment, looking as you do from inside and from outside, what specifically would you like to see change?
Yeah, so I think again, I'm talking about the execution piece. I just think there needs to be a lot more partnership between the central government and state governments. And I just think that, again, I'm not privy to all the political ramifications of things, but the fact is that that's one. So it's actually really partnering up with the governments because that's where the execution is happening. Two is that I think, again, we are making good progress, but I do think that this, ultimately, when you want to create those 10 million jobs, which is what's actually going to drive this economy and why people are investing, you've got to create more opportunities on vocational training, things like that, which actually, employ people at scale. So the supply of good labor is a problem. And the third thing, which is, it's very hard to see from a pure visible standpoint, India is very uncompetitive from a cost of infrastructure and public goods standpoint. So to actually just operate, so if someone had exactly the same factory in Vietnam or China and here, the actual cost of operations is about 15 to 20% higher because the infrastructure costs, all kinds of different costs. So I think there are incentives which are trying to bring that down, but that's the other thing. I mean, you cannot be competitive globally if your cost structure is 20% higher. I mean, a lot of business people sitting here, I mean, it just won't happen. I think the other thing is that while the local, the market here is a big market, so a lot of investment happens for this market, this is an opportunity for India to be manufacturing for the world in addition to manufacturing for the country. And I think that too, 5 years ago, we were always talking about domestic market, let's manufacture more, let's be more, self-reliant, like the Prime Minister's big initiatives. But we should be manufacturing for the world here. And again, we have a unique opportunity given the rifts that are going on between the geopolitical problems between China and the US, that you actually have a big opportunity where you could be diversifying a lot for global multinationals and global operations in Europe and the US.
You were in Hong Kong recently when that big Communist Party meeting happened in Beijing. I'm curious to know your thoughts on where the China story goes from here economically. As far as militaries are concerned, India has a build-up with China along the line of actual control, and that's a big headache. And many would like to know whether, because there's a lot of conspiracy theories around how a lot of the Chinese data is fake, the real estate debt is piling up, there's a big bubble, and that the Chinese economy at some point in time could either flatten or possibly even start coming down. The flip to that is that the growth of China is irreversible, all of you are delusional and living in la-la land, and China will sooner than later beat the United States and rule the world.
So again, there are lots of pundits, and as I said, I was in Hong Kong last week, only place where you still need to wear a mask, you got to test every day, you got to do all kinds of things, which is like, anyway, whatever. But I think that we'll have more clarity on that in December and March. The key issue is that President Xi now, based on all the people I met and spoke with, both in the mainland as well as in Hong Kong, is that he's now in full control, because otherwise people in even that group of 7 people, there were people who were from another side. I mean, I don't know whether you saw this TV where Hu Jintao, who was the previous president, was physically just walked out of the Communist Party event, and publicized around the world, which is like a complete shocker if people were surprised. But it was a show of power. That's the interpretation. And so there's the thing that now everyone is in complete control, that what happens next? Is this going to be back to kind of quasi-Mao days, or is it going to be? My belief is, and based on again, people over here, when a politician, you had Prime Minister, you had Mr. Thackeray here and others, they pass their words, et cetera, et cetera. In China, it's a whole new level. There's a whole industry which sits and analyzes speeches. How many words were security? How many words were development? How many words were economics? What does that mean? Blah, blah, blah. I do think that while you'll see a lot more focused on Taiwan, security, et cetera, like you were saying, that they recognize that business and government, economy, et cetera, is absolutely important and critical. It's not something you can just kind of flush down the toilet in the name of communism. So I believe that they'll be back on track. And the person who's the number 2 guy, people, just so you know, he was the one who was part of a province that really grew. Alibaba and Jack Ma really encouraged it. He's the one who was now, as the head of Shanghai, brought in Tesla at scale. I mean, the second largest manufacturing of Tesla is in China. He was responsible for that. And he's the number 2 person. And so I think that this thing, oh, China's finished and all that, is just not true. I think the growth rates will be lower, but that's because it's a smaller base. India's growing at 8% on a $2.5 trillion base. China's going at 2.5%, 3% on a $14.5, $15 trillion base. I mean, so they're actually creating more GDP per year, even though our growth rate is higher. So it's not, I think I'm still quite optimistic that from a business standpoint, that China is still very much there. But given what's happened, I think investors will be quite skittish. And so therefore, in the next 5 to 10 years, I think India will be a huge beneficiary of that. So we're running out of time on this session. I want to spend some time talking about one of your passion projects, which is impact investment. Yeah. And there are 2 ways of looking at it. One is that, you've already made all the money you had to, and this is you now trying to give back in some small way. The other is that this could possibly be the next big idea, and it is not just socially good, but also commercially very viable. What are the big impact investment opportunities you spot in India at this moment? Oh, it's huge. So first of all, it's not a passion project. I mean, just to correct you on that, this is again, the previous speaker talked about climate, right? And this title of the talk was supposed to be climate, but it is, we're sitting here in Mumbai. All right, so just to state the facts, sitting in Mumbai. Mumbai is the 2nd largest city at risk, coastal city at risk in the world. Every modeling that suggests that even without assuming too much global warming, even at the trends we're going now, even a little lower, significant parts of Mumbai will be underwater in the next 20 to 25 years, unless something is done about it. So, historically, Mumbai grew out of the water. There were 7 islands around here which the British kind of combined, like Kolaba, Mumbai, Mahalakshmi, Parel, Mahim. Those were all islands. They became into one. And essentially, these studies show that a combination of seawater rising, a combination of increasing rainfall in a more concentrated period of time, as well as more cyclones and stuff, which we've been seeing and we'll only see more of. Essentially things like Marine Drive, Haji Ali, this Western Express Highway will all be underwater. So to the extent, but the key though, from a development standpoint, what does it matter? Because people who are in this room and others may be less impacted. Half of Mumbai who's living, at the sea level, what happens to them? So there's that bigger development issue, but there is a massive amount of investment. Energy transition, whether it be mobility, people all talk about EVs and all that, it's a small piece. But whether it be EVs, agriculture, urban development, this whole area of clean tech, that is, and in fact, like I said, I'm developing a whole new course at Harvard Business School on climate strategies and opportunities as far as India goes. That is where the biggest opportunity in the world is next 50 to 50 years, 25 to 50 years. It is the equivalent of when the horse carriage went to combustion engines. It is the equivalent of, if you think about what happened 20 years ago on the internet, all the trillion-dollar companies of today, Amazon, Meta, Google, et cetera, were all set up less than 20 years ago. And I think that India is ripe for actually, taking a massive amount of this opportunity from an investment perspective and growing it. Because not just the domestic market, this is the opportunity. So one stat, like asking you a question since you have very good answers. Today, 50%.
This is the problem with the professor. Even in class, and I remember this, he would cold call students. Some professors are nice and gentle and they'll look at who might know the answer to a question and go to him and be nice. He was brutal, and there he is. Why didn't you cold call somebody from the audience? And this is the second time he's doing
well, I can ask Arun.
Thing.
Arun, maybe you want to answer this question. Like 50, like a good CEO. So right now, 50% of India's current account deficit, like I said, is oil. What do you think, what will be the biggest potential current account deficit item 30 years from now? What do you think?
Okay, who wants to venture a guess? You've got lots of top CEOs sitting here. Does any of them want to give us a guess on what could be the largest contributor to India's current account deficit?
What is the new oil? There are not going to be, people have banned EVs in the whole world, and that's going to come here too.
Water?
But importing water is a problem. So this is like import-export, right? So what would be the biggest potential? Yeah, metals. Basically, the whole world is going to be powered on metals and batteries. Keep this in mind. Everything you do, this room, you walk, your phone, everything, your movement is hydrogen, metals, etc. And basically, if you look at the metals, copper, nickel, zinc, aluminum, there are 5, 6 of these metals and rare earths. That is where India should be investing, because otherwise what you're going to have and that's a huge investment opportunity, by the way. A lot of people looking at that. 25, 30 years from now, you'll be in the same boat where instead of oil, you're scrounging around the world for copper, and copper prices going through the roof, etc., because the whole country is being run that way. So in terms of longer term thinking, that's the other thing, is like, where do I become a lot more export oriented, and B is how do I reduce reliance on imports, things like this, around the climate issue. Massive investment opportunity.
So where is the opportunity there in terms of the policy framework currently? What you'd like to see? Because a lot of the conversation so far was very short term. Are you seeing that kind of long term thinking?
No, so I think that's the long term thinking has been a big problem here. We talk about this at Harvard, which is called the tragedy of the commons. And the tragedy of the commons problem, and climate is one of them, is that it is nobody's problem, but it is everybody's problem. And so right now, if I sit there and pollute something or throw some plastic, it's not my problem. But if everyone does it, it's everyone's problem. And that is the biggest issue. That is where the climate thing breaks down. Like, when Aditya Thackeray is talking about that, I think by the way, I think some of the things he's doing on climate are fabulous. But the fact is, that's where the tragedy of the horizons. Climate is something which just creeps up on you and suddenly it'll hit you in the face. It doesn't happen every day. It's really incremental. It doesn't impact you. So tragedy of the horizons. If you're thinking about 2 months or worrying about BMC election, that's one thing. But if you're looking at what Mumbai is going to be, big swaths of that underwater 25 years from now or 20 years from now, that's a long-term commitment that needs to happen. So this issue of tragedy of the commons, basically the way it came about is like if you're grazing in a field and you let your cow or your animal go free, the cow and animal will be fine, but before you know it, the entire field will be empty and everybody will die. So that's exactly what's happening with climate. And I think people are now realizing, investors are realizing, I mean, think about it, the large investors globally, including those invest in India, you know, you can think about the next 2-3 months will be great investment, but if all your investments are suffering from climate change or from inequality and from riots and from bad governance, your portfolio levels are going to go down dramatically. And so investors, including those looking at India, are very focused on the fact when they talk about long-term investors, which is where most of money is owned, when they talk about a quarter, like in the context of a business in reporting, when they're talking about a quarter, they're not talking about 90 days. They're talking about 25 years. And so you're seeing a big push from investors. And I will say that on a relative basis, I'm a little disappointed that in India, that level of awareness, that level of focus is just not there as it is especially in Europe, now increasingly in the US. And hopefully it comes up here because it's going to be a big issue and risk. But equally, I think for the audience, it's a huge opportunity. It is a once in a lifetime generational investment opportunity to be doing really good and important things in the world and making a hell of a lot of money doing it.
I told you he's a rock star, Professor. And he's packed in more insights in the last half hour. And hopefully something for all of you to chew on, munch on, or possibly even invest with. Thank you so much, Professor Gandhi, for joining us.
Thank you.
It's been an absolute pleasure. Thank you.
Thank you, Rahul.